Hey, what's up YouTube? This is Leo with DRIPCalc, and basically I have a new strategy going forward. And by the way, this is not financial advice, just what I'm doing. I will be funneling all my YieldMax dividends into BITO, ProShares Bitcoin Strategy ETF, and as well as reinvesting the BITO dividends themselves into the stock and increasing my position. And the reason for that, I feel that at this point the price of BITO has gone down to a level where I am comfortable to begin increasing my position, even though I think it might keep going down from here. But I'll talk about the whole plan in this rather longer video. So strap yourself in, buckle up, let's begin. Quick note, please smash the like button, subscribe to the channel. I think I might have a lot of negative comments from YieldMax fanboys, and I'll explain my position on YieldMax. I actually made a video already, but basically I said in my video like a month ago that I'm done with YieldMax, and what that actually meant, if you missed that video, if you didn't see it, but basically I stopped reinvesting the dividends back into YieldMax, so I'm not increasing the position, and I stopped adding any new funds to that position. But what I've been doing is just collecting the dividends, investing them in Palantir and Robinhood, and as well just using for different things. But I haven't been increasing. So me being done with YieldMax is not selling out of my position. I haven't sold a single share. I don't plan to. I plan to hold it long term. And even though the NAV is dropping, at some point it will pay for itself and will be a cash cow. But I am not increasing my position in YieldMax at all. So, but at this point I feel comfortable to start increasing my BITO position. Okay. So with that said, let's begin. Here's all the details that I think. Once again, not a financial advice. All of these funds are very risky, so don't follow me into this. Just my thoughts on all of this situation and what I see the future for these funds. Okay, let's begin. So basically, the last couple of months have been brutal for YieldMax funds. You can see it right over here. They're going down. These are the biggest YieldMax funds, and the picture is not great, while S&P 500 is still dancing around all-time highs. That's not what concerns me. I understand that it's been brutal for YieldMax because the underlying stocks are going down for the most part. My main reason for being done with YieldMax is I think that managers are very not careful with our money. They're taking unnecessary risks, in my opinion. And I will link the video in the description, if so you can actually watch it. And because I already explained it for like 20 minutes, I don't want to go back into it. But another reason, YieldMax funds, they don't have the upside, okay? Whereas I believe that BITO has a lot more upside than YieldMax. That's number one. And in this video, I'll go into a lot of financial details and the numbers. And also, I think they have an ability to greatly increase their dividend. Whereas YieldMax, it's a hit or miss. One month they do well, next month they don't do so well. But overall, they have a limited upside. And right now they're starting from a bad position, and I'll give you examples. And finally, none of this is financial advice. I don't think you should be following me into these trades. I just explained to you my position and why I think that BITO has become attractive again, at least for me. Okay, so let's begin. First of all, I will quickly show you my BITO position and basically a little bit of history of BITO. So it IPO'd or began trading over here in October of 2021. I immediately bought into the fund at $42. So above its closing price. It's been going ever since. And they didn't start paying dividends basically for more than a year. They started paying dividends over here in February of 2023. So that's like almost a year and a half until they began paying any dividends. And I never sold. What I did though, on the same day that I bought the shares, I sold the covered call going out to January of 2023, so a little bit more than a year away, like a year and 2 months, 3 months. And I collected $18 per share. So I bought 100 shares, let's say, of BITO for $42 each, and I collected $18 in covered call premiums. And I think my strike price was something like $55. So like even if it got assigned, I would make a lot of money on the upside as well as the covered call premium. And this is when in 21 when Bitcoin made all-time high record, and after that it started falling, which actually is reflected clearly in the BITO price. It also started falling. So over here after November 8th, boom boom boom, kept going down. Now I didn't I wasn't catching the falling knife. Anyway, back to that original transaction. I sold the cover call for 18 bucks, and so that effectively brought my cost basis down from 42 to $24 per share. Okay, and then somewhere over here, or maybe over here, I bought back those calls for like $3 or $4. So effectively I collected $15, and now my cost per share was 27 bucks. And I was sitting on a loss, I was sitting on a red, it was painful. Don't get me wrong, I think that even right now BITO can fall below $10, even though it's like 17 bucks right now. Right here, here's the current price. Now the market is already closed, so it doesn't change that much. It basically fluctuates with Bitcoin, but I see a possibility of this going below $10 again, and I'm not that I'm fine with it, but I've been there before. I am ready for that mentally, number one. And number two, let me show you this. I'm ready for this financially. So this is basically a bird's eye overview of my BITO position. This doesn't have the number of shares, it's just basically the totals per share. So okay, my net cost per share is $21.75. Yeah, call it 22 bucks. And currently the price is, call it 17. I'm down $5 on a share. Okay, but then next column, net cost. My net cost after all the dividends I have collected and all the covered calls I have collected, covered call premiums, is sitting at $9.36. Okay, and so basically we take this price minus dividends and covered calls per share, $9.36. Okay, and so that gives me effective yield, my yield on cost, of 155%, which is insane. And also each time BITO pays a dividend, this reduces my net cost. So for example, let's say next month they pay, let's say they drop the dividend by 40 cents. That's like a 33% drop. Okay, so let's say they pay only 80 cents, which is kind of horrendous. Okay, and so this is total dividends going for next month. Okay, but then my next net cost drops to 8.56, and even with a 0.8, my yield on cost is still $112. Now I don't think they will drop it to 80 cents, but it's possible. If you look over here on the website and we look at all the dividends, you can see like they started paying in February 15 cents, then they dropped it a little bit, 10 cents, then a huge increase to 46 cents, then drop, then kind of flat, 43, then they make a huge payment, 66 cents, down to 38, and down to less than a penny. Okay, and then just 7 cents, a little bit, then Bitcoin starts running in January and February of this year. Now over here you can see two payments for January. Basically they are it's essentially one payment of combined 28 cents, but because they made the payment and then they recalculated whatever they owed the shareholder, because at the end of the year they have to pay out certain percentage of funds that they have collected in the premiums. They have to pay it out to the shareholders, so there's two payments. And then or maybe it was like for January, whatever. So we don't have a January payment, let's go straight into February. Maybe this end of December is like a January payment. Anyway, nevertheless, Bitcoin starts pumping, the ETFs are approved, boom, 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 we go as high as $1.77. And now we're coming down, so we could get back to like 40 cents, 20 cents per share on the dividends, and we can go probably below $10 per share on the price, and that depends on the price of Bitcoin. Okay, if we have a bull run, this thing will skyrocket to 30 bucks again. If we end up not having this bull run that everybody's expecting, 100k, 150k, then all bets are off. But eventually, the way I look at it is eventually we will have a bull run. Eventually Bitcoin will moon, and long term, I see 300,000, 500,000. Not today, not next year. Few years from now there will be a crypto winter. I think Bitcoin will be below 30k again, and if we right now fall into recession, it could go to 20k again. So we don't know that. I just I look at it, I have a really nice net cost on the shares. I collect dividends. I haven't reinvested my dividends in a few months. I just kept them, and I've been collecting them, but the share price keeps going down. And I feel like below 17 bucks or around 17 bucks is a really good opportunity for me, even considering that the share price might drop below 10 bucks. But you know what, if Bitcoin drops below, if shares of BITO drop below $10, that means Bitcoin is like 40,000 or something like that. That means the whole economy is down in the toilet, and everything is down. It's not just BITO. All right, so next I want to talk about first the potential upside and why I don't like YieldMax funds. Okay, so this is a hypothetical example. Let's say they have a fund, an ETF, and they have their synthetic position at $100, okay, and they sell a cover call for 110, which is pretty common for YieldMax funds. And whatever they collected, the premium, maybe, I don't know, 50 cents, whatever. The premium here is irrelevant. So if the price of that underlying share goes to $130, then YieldMax only collects $10 because they are required to sell the shares, or rather they do a so-called synthetic bailout, and basically they have a limited upside of only $10, and they miss on the $20 run above their covered call, and basically their total gain is $1,000 per contract. Okay, now, and this is example with YBIT. I already made a video why I really don't like YBIT, why I think YBIT is a crappy stock. So YBIT basically is a YieldMax ETF that sells covered calls on BITO. All right, and I find that kind of stupid, owning YieldMax, because you can just own BITO and sell your own cover calls and collect better yield, and on top of that you collect the cover calls premiums, and even if you don't sell cover calls, which I think is kind of like naive, but whatever, here's the performance of these two funds from the inception of YBIT. Okay, so BITO is down about 18% and YBIT is down 21%. Okay, so this already includes the dividend that hasn't been paid yet. Right here, this will be paid in a couple of days on September 10th, so in 5 days. But for the reasons of calculating this returns, because if I didn't change the payout date, then this would actually be down 23%, and it would seem like YBIT is doing better, when in fact this dividend is coming. If you held the shares, if you had the shares before X dividend date, you will be collecting that $1.20, and so you're effectively down 18% since the inception of YBIT. Okay, and YBIT is down another 3% from here. And basically YBIT dividends have not been calculated here yet for the months of August, so they'll be paid out in September. But what usually happens is the stock goes down once the X dividend date happens by about the amount of dividend. So basically it's already priced in. We already know what the dividend is. It's like 72 cents if I'm not wrong, but it's already priced in, and as soon as X dividend date happens, the share price will drop, and we can see it actually on the price chart. Look over here, you can see BITO dropped from when was I think this was the X date, and boom, it dropped. Actually it dropped more than the amount of the dividend because Bitcoin also went down. So anyway, now this is just comparing it to YBIT. So again, I think buying YBIT versus BITO is kind of stupid. Like, let's say you buy both of them today. You essentially cannot trade options on YBIT. Nobody will buy you cannot sell covered calls. Nobody will buy them. The spread is completely insane. But you can sell covered calls on BITO, and that's what I've been. So here's the options chain for BITO, and basically, let's say you bought shares today. If you buy 100 shares, you can sell covered calls. So your shares are collateral that you agree to sell. Each contract is 100 shares. If you have 100 shares, you can say, like, I agree to sell my shares, for example, for $18 on or before October 4th, and for that you'll collect about 57 cents per share in premiums, and that's about 4% return in 1 month, less than 1 month. You can go a little, if you believe that you want to collect as much premium as you can right now, you can go, say, for example, to January, and you can collect like 10% in it's 4 months away. You can collect 10% upfront, and then you agree to sell your shares for $18. Now, in both examples, I chose an $18 strike, but if you treat this simply as an income vehicle, and you want to collect as much covered call premium and dividends right away, and you're okay, parting ways with this stock, you agree to sell it for $18. By the way, on January 25, unless we have Bitcoin bull run continue or resume, then I think the shares of BITO will be below $18. That's my thinking. Again, not financial advice, just my thinking. And collecting 10% upfront, I think is quite nice. It reduces your costs right away to about $15.30 versus $17 right now. Okay, and then you keep collecting dividends as the time go, and I think average dividend in the next 4 months, if we continue on the same trajectory as we've been going, will be about 80 cents per share. So another $3.60 you'll probably collect in dividends over the next 4 months. $3.20. So you know, almost $5 you collect right away. And on January 25 you agree to sell, for example, for $8, but you're already up $8 and another $1 on the difference between current price and your strike price. So I think it's quite nice return. If you never assign, then you get to keep your 10% premium. Now you can go even further. This is what I did initially. You can sell something like a $20 call for $3.10, but that goes out a year and a half. I think the premiums right now are a little bit weak. Yeah, on implied volatility only 48%. Usually when Bitcoin runs, this stock has implied volatility of about 75%, sometimes even higher, and so that means your premium would be almost double that. Everything the same, everything identical, price whatever, but let's say Bitcoin is morning, you would be collecting about $5 premium on this and another $3, so that's like almost 20% upside that you will get if you're assigned on these shares. Okay, now you can get assigned at any moment on or before the expiration, so that's 500 days away, 489, but whatever. That just shows that you can sell covered calls. This is pretty liquid. Like, yeah, the bid spread is kind of like wide, it's 30 cents, but it's, you know, not as bad as like basically there's no spread, nobody wants to buy your covered calls on YBIT. So basically the point is that instead of sitting on YBIT and being at the mercy of managers of YieldMax, you can buy the shares of BITO, collect better yield with better dividends, and sell your own covered calls, further increasing your income and reducing your cost basis. Okay, that's how I look at it. So, but that's just YBIT. Let's talk about YieldMax overall. So if we compare BITO to YMAX, which is arguably one of the safer YieldMax ETFs, you know, because it's a collection of all their funds basically grouped together. Basically 24% since the inception of YMAX is the total return on BITO and 7.7% total return on YMAX. So that shows you the larger picture. These are all the YieldMax funds grouped together except for their short funds. Okay, and you can see the performance. BITO has done much better. In fact, it's done much better than S&P 500. This is only like a 7 months period, and it's up 24%. And so here's why I really don't like YieldMax going forward, especially at this point in time. Basically, here's the SPY year to date. SPY is an S&P 500 ETF, and basically the S&P 500 index is 10 times the amount of SPY. So multiply this by 10, you get 5,490. Basically, it's a great representative of S&P 500, and we're still dancing around all-time highs on the SPY, on S&P 500, and basically the drop has not begun yet. You know, if there will be a drop, I don't know if there will be or not. Will we have a recession, or we'll continue to moon? But at this point, you know, people are nervous. Tomorrow is the supposedly federal rate cut coming, 25 bips or 50 bips, nobody knows. Also, the jobless claims coming out tomorrow. Now, Federal Reserve will know those numbers before they make a decision. They probably already know them. They probably already know that those numbers are incorrect and will be retroactively, you know, corrected at a later date, which they just did a couple days ago, and corrected their numbers by $800,000 jobs down. Anyway, if there is a correction, if there is a recession and the market is going down, we did not even begin the move yet. We're barely off the all-time highs, which is about 564, 565 on the SPY. We're still within like a couple percentage points. Okay, and but look at ETFs from S&P 500, from YieldMax. So we go year to date, down 58%. We did not even start the move down. Okay, we're already down 58% on Connie, Misty, year to date. It's up because like it only started trading in February, but like from here, that's a straight line down. Now both of these are Bitcoin related, so if they're more contingent on Bitcoin, but let's say Nvidia or Nvidia. So this tracks Nvidia, so go year to date, it was up over here, then up around $30 again, and look at this move down. And again, we didn't, like, Nvidia can actually drop to like $80, $70 a share, which pre-split would be $700, and that would be insane. It would still be huge increase in the past year, whatever. But if we start having a massive slide, then this all can go down significantly, and the tech stocks will go down even more, and then the losses on the YieldMax funds will be insane. I mean, you think 53% down is it could be just the beginning. Let's take a look at Tesla. I think it's a great example here. Let's take a look at Tesla. Now it already had a split, reverse split, so you can see a really good picture of what might happen. And by the way, the share price of Tesla since this period, let's do compare Tesla versus Tesla and look at the share price. Tesla is basically flat during this period. Price chart. Okay, Tesla is up a little bit. So it started when Tesla started trading. Tesla was 183. Today it pumped to about 228. Okay, so it's up. We'll call it 25%, and Tesla like Tesla is down on a share price, down 65%. You know, but if this is going down, then right over here when Tesla was like 144, this was down 147, 167, 68%. Basically, whereas Tesla picked up all this slack, okay, went from 145 to 230 over here. That's a pretty good move. Tesla is basically flat. And let's look at one year. Now let's look at total returns. It's actually better metric. So over here, Tesla starts its move up. Over here, you notice Tesla is down 6% and Tesla is up 17%. Okay, this was August 30th, so last Friday. Boom. 5 days later, Tesla recovers only 2% of its total gain year to date, or whatever, since inception, and Tesla gain goes up 8%. So that just shows you the outside move in the underlying, and the problem with that is because Tesla is capped at 215, so they're in the money by basically 15 bucks. And that's why I created this example right here, that you have limited upside when the underlying moons. You basically have limited upside by your covered call, and Tesla managers, they sold the 215 and 217 covered calls, so it's a mixture, but still they're $12.50 or $15 in the money, less the premium they collected, which was about $2 a share. So they're down $10 and $12 on each of those, or missing the upside by $10 and $12 on each of those. So basically that puts a limit on how much you can gain. And yes, you make money from the dividends, but in this month, in the month of August, Tesla has generated a net income of 3 cents per share, and that excludes the losses on the synthetic. Okay, somehow they're paying 81 cents, so I feel like that's a return of capital. So it's not really your dividend, that's a return of your capital. You're basically getting back what you put into the fund. So on one side, you will not be taxed on it. On the other side, if you ever sell, if for example somehow Tesla moves, really, like if, let's say it goes back to 40 bucks from $13-14 that it is right now. So it dropped from, where is it? That's total return. Tesla share price. So it started trading at 40 bucks and now it's down significantly, down to 14 bucks. That's a huge drop, like 60-some%. But let's say it somehow moves back to 40, you will be taxed on most of that so-called dividend that you receive in a couple of days, because that was return on capital, and you will be taxed capital gains. Now, not investment advice and not tax advice in this case, but that's pretty much how the mechanics of this work. And it's basically the case on all the funds. Yes, the Nvidia and Misty, they're doing great since inception. Yes, if you bought Coney during inception, when it began trading, you're up 68%, 69%, and also with this latest payment, Coney and Nvidia will be fully paid off. Meaning, if you spend 20 bucks when it began trading, you will have collected more than $20 per share in dividends. So you're in the green. And this is year to date, or not year to date, past 12 months TTM return. These numbers were hovering around 90 and 100% just a couple weeks ago, and they're already dropping below 70. So, and we did not even begin the move down. And if we actually move up, we will be capped by our covered calls, because a lot of times Tesla, not Tesla, but YieldMax managers, they sell covered calls very tight to collect higher yield, but at the same time, then if the stock moves in a wrong direction for them, they end up with massive losses. Like for example, Connie lost last month, they lost like $60 million on the synthetic alone, or maybe combined $60 million. I made a video about that. I don't know, you can check it out on my channel. But basically, there's very little upside, and often because of their very risky covered call strategy, I feel like we're losing more money than we could have gained. But whatever, I mean, I'm not knocking them. I'm just, for me, it's no longer a viable investment. I don't like it. I'm gonna sit on my shares, collect the dividends. As you can see, both of these guys, Nvidia and Connie, these guys will be fully paid off for those who bought at the inception. You can look over here. Let's say Nvidia. Scroll all the way down to this section. So far, they paid almost $20 in dividends lifetime, and the next dividend will be like $1 something, and so that will be more than 100% paid off in dividends. And Connie, same thing. Yes, you do drop on the NAV, but you've collected, if you invested in the beginning, you've collected enough in dividends, and so there will be another $1.04. So you'll be sitting at $20.57 in like a week. Today is the X date, so if you didn't buy by now, you're not getting the dividend. But anyway, each share of Connie will pay for itself in a couple of days just in dividends. So if you bought in the inception, you're doing great. But those are basically the best ETFs. Look at these guys. They're down like crazy. Again, this is year to date, if you, or not TTM, past 12 months. But if you look at this one from the inception, down 57%. No, down 30 to 37%. If you reinvested your dividends, you're down more than if you just kept the money. AIYY. They crapped the bed yesterday. They were down like 19% at some point after earnings, and then their CEO, C3AI, he goes on some TV interview and he's like, "These are great numbers. I don't understand why the Wall Street doesn't like it. These are great numbers. We are growing at 21%. We have collected $80 million in revenue the whole quarter, and we are this is great numbers." Yeah. AIYY also not doing good, but C3AI is doing probably even worse. Anyway, this video is not about C3AI. I'm just showing you that collectively, look at all this sea of red. So there's only a couple of funds that are in the green, but many of them are in the red. And here's the YMAX, which is a collection of all their ETFs. In the past 7 months, give or take, they're up less than 8%, and BITO in the same period is up 24%. That includes dividends reinvested. Okay, now here's my bull case for BITO. I already explained why YieldMax funds don't have much upside. However, in my opinion, in my belief, BITO has a lot of upside. Okay, let's say, so this is a 2-year chart, 2-year returns on BITO, 170% return with dividends reinvested, and that's maybe not on par with Nvidia, but pretty out there, pretty good return. So if you started buying in September of 2022, back then Coinbase was like $60, $70, and then it dropped even lower in January of 23 to like 35. But anyway, Bitcoin was like 15,000 over here, and started rising slowly. And this is, I think, just around the time when no, over here, this is when the whole FTX fiasco happened. So Bitcoin basically like bottomed out around $15,000-$16,000, and since then it's been rising. So, but if you go all time, BITO return is negative still. But again, if you look over here, because I have been averaging down and I have been selling cover calls and collecting dividends, my net cost is way below current price, and my yield on cost is amazing, 155%. And even if they drop the dividend by 33%, I am still making out a very nice yield. So I am not worried about my current position. Now, here are my thoughts on BITO going forward. So if we have another crypto winter, we'll probably drop on the price to around $10, maybe below $10 again. That's a very good possibility. I mean, it's only like 30% from here. BITO happily did that in the last couple of months. It basically almost halved since March. That's 6 months. If we have a crypto winter, I clearly see a path to below $10 now. Again, that's not what worries me, or rather that doesn't worry me. I've been there before, and by then, with the dividends and covered calls, my yield on cost will, yes, my position will increase, so my cost, my net cost will kind of probably rise once I start reinvesting the dividends. But with each dividend, it will decrease. I think in 6 months, let's say we collect an average of 40 cents, and so this will drop to below $7 in the next 6 months. And if we collect more than an average of 40 cents per month, it will probably be below $6. Anyway, and I'll have more shares. So, however, let's look at the bull case for BITO. Now, I already explained that YieldMax is capped on most of their positions, so you cannot capture a lot of upside. However, BITO captures about 70% of the Bitcoin upside, and that's because they sell, they trade futures. And so even though in the last couple of months, when they roll their futures positions, they're actually, I believe it's really hard to track. They're actually, because they don't post their trades, so it's really hard to track, and you don't exactly know when they do it. They do it not at once. Because last month I captured, they rolled half of their position a few days before the futures expiration, and then the other half around expiration. And actually, the first half was much more profitable for them than the second batch. So it's hard to follow BITO trades because they don't actually post them, and you have to really stay on top of that. But overall, when Bitcoin goes up, BITO trails it by 30%, but captures about 70% of the move up. Okay, and let's say we have Bitcoin going to 100K. Okay, that's that's like 80% from its current price, and that means so about 50% move up for BITO, and 50% up for BITO means $8.5. You had $8.5. Boom, boom, boom. You're sitting at about 25, give or take. Now, those are not exact numbers. They're just what I'm thinking. Okay, so first of all, we'll be collecting massive dividends as we go up, because each time they make money on the futures, they pay out sweet dividends. You can see over here, paid $1.77. That was amazing. But yeah, so if Bitcoin has a bull run, we do not capture the whole movement, but we also collect dividends, and we have a price movement. And back to BITO options, we can now sell out of the money calls. And if we get close to $30 again, I just plan to sell like $45 calls going as far as possible. Maybe $45 calls as far as possible. And my thinking is you can collect about 20%. So right now you collect almost 20% if you sell a cover call for January 26. So that's about a year and a half, a year and 4 months out. So 16 months out, you collect almost 20% right away on the covered call, about 18%. And you keep collecting dividends. But if I sell at, like, when Bitcoin starts running, guys, these premiums, they will be much better. They will be much higher. They won't be 48% implied volatility, will be about 70. So you will be able to collect almost 25-30% on instead of 20%. So I will secure a really nice chunk of cash up front. I'll be collecting dividends for the next, say, 16 months. And by the time those come to expire, we'll most likely have another crypto winter. But I think by then the Bitcoin bull run will end. And if it doesn't, you know, $45 from below $10 cost basis, or even like the paper cost of $22. And by the way, I will be reinvesting dividends, so this will go down because now the share price is $17. So each time I buy my this column, this number goes down. Okay, so yeah, so that's my bull case. So basically, unlike YieldMax, BITO has a potential to catch most of the move. And so, like we can see over here, let's take a look at price. Okay, so Bitcoin over here was like $16,000, and BITO was, call it $10, and it moved up to 33, like say $34. So it moved up 240%, 240% move up. And Bitcoin basically quadrupled in price when it got to this point, even more. So it went up 300, let's call it 350%. So we caught about, you know, 65% move on the price alone, But then also keep in mind all the dividends that you have collected up to here. Okay, that's another, call it, let's look over here. I would say it's another like $6-7 that you collected, and so that brings you to $40. So our move up from over here together with dividends was like 300%. Okay, because so from 10 to 34, call it 34, and okay, so it says it closed, but this is not daily. This is like, you know, weekly price, because I didn't want to have like years of daily data on this chart. But let's say with the dividends it was $40, so 300% move up, whereas Bitcoin moved about 350%. So our move up was almost 85-90% together with dividends. I call it a really nice upside. You collect the dividends, but then also, guys, keep in mind, you can sell covered calls. This is something you can maybe on Nvidia. You can, like, I have like 100 shares of Nvidia Y, and I sold the covered call for $29, ending either in January, but I collected 60 cents for that covered call. Okay, so you can sell covered calls on something like Nvidia or Misty. Coney, not so much, especially now that it's down so much. Like, it's stupid to sell covered calls now. Nobody will give you a good price for anything, like, especially if you bought in at like 22, 23. Like over here it was 29. If you bought here, even with dividends, you're down, and you can't sell $29 cover call right now. So take a look. Let's take a look at that. So you can go to April. That's 7 months out. 29. The highest you can go 26, but then the spread, you will not collect anything more than like 10-15 cents per share, and that's 26. So basically, most of YieldMax funds are not. You can sell cover calls on them for the most part, but you can sell cover calls on BITO, and that gives you a lot of additional opportunity. Now, I kind of messed up on BITO. I only collected, like, not only, but I could have collected a lot more on BITO, and let me show you why. So here's the price. Now, let's go over here. So on BITO, so let's say I was kind of greedy over here. No, I got greedy over here, and I sold like a 28 call, and then it rolled up to 33, and I had to roll it up and out, so to $34. Like, I was in the money on the 24, so I rolled it out to end of this year, or like January 2025, and I collected. But because it was a roll, what I actually made from that is pretty pathetic. But if I sold it at the time, I'll show you. Okay, so here is this $34 call that I rolled. Let me zoom in so you can see better. Okay, so I rolled on over here, July 1st, July 11th. So, and I collected 60 cents or $60 for this contract. But at the time of the roll, the cost was $6. So I could have collected $6 if I sold it in July, and that the expiration was like 6 months away. You know, break even $40. And so this just shows you how crazy it is. So this is like almost 20%, 6 months out, and the price in July was July 11, June, July 11. Oh wow, the price was $20. So you're getting, so 20 to 34, that's a 70% upside on the call itself, and then you get another 30% for the option premium. That's insane, guys. That's like more than 100. That's exactly 100% upside, you know. And so that's what I'm saying, that, you know, when Bitcoin runs, the premiums on BITO are insanely good. Okay, and that's why I wouldn't be. That's why I'm not. Yeah, implied volatility at the time was 71.5%, and I collected. Like, if I didn't roll it, you see, I rolled it, so I collected $60 for this contract, but it could have been $600. Like, that's like 4 or 5 months of dividends that you collect right away, and then from the share price at the time of sale. I don't know why it doesn't give you a share price at that time, but yeah, this is nice. This is total return, but again, I didn't get actual $6. This is roll price. So what I did here, this is interesting. Oh no, I'm sorry, I bought back. I bought back. I guess there were 2 contracts. I bought back. It's not enough history here. Doesn't matter, guys. I rolled this contract, and what did I, why does it not show me exactly what I made on this option? But anyway, the price was $6, and the total upside from that point, because again this was sold on July 11th, was 100%, and you collected 30% of that right away, plus you collect the dividends for the next 6 months. So unlike Bitcoin itself, where like you have to sell, it's a taxable event, you have to pay capital gains taxes, whether short term or long term. On this thing, you can sell covered calls, you collect the dividends. Yes, you pay taxes on it, but you still have your shares. And when those covered calls expire, you can sell another batch and another batch. And I've been in this stock for almost 3 years, and yeah, it's a roller coaster, but I feel like going forward, the great dividend and the ability to sell covered calls, and actually there being liquidity for covered calls, like let's go trade options again. Let's go January of 2025. Let's see, open volume 427 contracts traded today, open interest 20,000. So there is definitely liquidity. And look at this, bid spread is only like 1 cent. That is amazing. So BITO is great for selling your own options. Why would you go with YBIT? It's insane. Anyway, guys, yeah, this is a long video, but thank you for watching. Let me know what you think about it in the comment section below. If you're in BITO, if you're in YieldMax, what are your plans? Now, again, guys, I am not selling my YieldMax. I'm just keeping it as a cash cow. I already paid for it. At this point, it doesn't cost me anything. It's not on margin. So cash out of pocket. It's a much better return than keeping the money in a bank account. And even though it might go long, for a while, for a long period, it will be red. It's already red. But yeah, we've had a pretty rough couple months for YieldMax. But it's a cash cow. I just collect the money and I will reinvest it into something that I see great potential for, even though there's a pretty big downside for BITO. If we have a recession, Bitcoin definitely does not run. I might go down below 30 grand again. But long term, I'm thinking long term. I already had this stock for almost 3 years. I'm looking next 5 years, because eventually Bitcoin, in my opinion, will go to 100, 200, 300,000, and BITO will be a very sweet cash cow, and it's not limited by the upside, because they trade futures, so they capture most of the upside plus the dividends plus the covered calls. I love this fund, and I like the price right now, 17 bucks. I'll just show you an example why I love this price. So over here in May of 23, the price was like 16 bucks. So I bought covered calls. I don't remember exactly the date, probably around here. I bought covered calls, leaps actually, not covered. So I'm sorry, I bought leaps for this for BITO. I bought 2 contracts, $15 strike, expiring January 2025. Okay, I bought them for $2.75 on average. So my break-even price would be 17 bucks. At the time, the implied volatility was low, and that makes me think maybe I should buy covered calls right now. Well, no, I'll wait a little bit. I think it's a little early to buy calls, but basically, so I bought leaps meaning long-dated expiration on the calls that you buy, and so my break-even was 17.75, give or take, and then over here in around May, I exercised those options. So the price was around $26, $27 when I exercised. So effectively, I bought those shares for $10 less. So I invested $275. So basically $550 for the option to buy the shares at $15. So my break even $17.50 or $17.75. When I buy them, I immediately I could sell them, but the extrinsic value on them was basically non-existent. They were trading at par. I don't know why. So I just exercised. I got lower cost basis on my shares. I did not have a taxable event, so I didn't have to pay cap gains tax on $10 upside that I got from it. And I've been collecting dividends since then, so collected about $5 since then, and that basically makes my effective price on those shares, those 200 shares that I bought, or 2 contracts that I bought over here in May and then exercised over here. That's 200 shares. My effective cost on them right now is $12.50. So I already sold covered calls on them a couple of times. I collected $5 in dividends, and my cost is 12 bucks. So I think it's amazing. By the way, there's another part of my strategy. When we get to like $11, $10 range, guys, I'm gonna start buying calls. I'm gonna do this again. So let's look over here as far as we can go. All right, so right now I feel they're kind of expensive. So yeah, but because we're at $17, so I bought at the time. Let me show you. All right, guys, so here are the trades. Actually, there were 3 contracts. I was wrong. 3 contracts, $15 call expiring January 25. I bought the first 2. I bought on May 18th for $2.90, and then the next one like 2 weeks later for $2.28. So I guess BITO went down. I got a better price, and I bought those covered calls, and the average price between them is $2.75, give or take. And yeah, so May 18th, let's look at the May 18th. What do we have here? May 15th, so it was around like 16 bucks. So I went down $1, okay, and paid $2.90 for them. And then on June 5 it was like below 15 bucks, so I went above, a few cents above, or like, yeah, a few cents above. Right here, June 5, it was $14.32, so my strike price was like 70 cents above the share price at the time, and I paid $2.28 for this contract. And then I exercised somewhere around a year later, collected about $5, $6 per share since then, sold a couple of covered calls. So yeah, very nice. So what I'm thinking, so a $16 call is $4 right now. So yeah, I would want this to go down maybe to like $14, $13 level, and that's when I'm gonna start buying LIPS again. And I think that would be pretty nice. Yeah, so I guess the implied volatility back then was, see, it's 40% here on this one. I probably would want to see it about 30% implied volatility, so that would make the call cheaper. You can, when the Bitcoin runs, you can sell covered calls, but when it goes down, when it's crypto winter, I would probably buy the covered calls. Not a huge position, but definitely long dated, because the short term, like this stock, if it's moving down, it's moving down, guys. If it's moving up, it's moving up. It's a direction. At this point, we're kind of in a limbo. The economy is kind of like, you know, borderline weak and strong. So tomorrow we'll have a lot more clarity with the first rate cut supposedly happening tomorrow, most likely 99.999%. And at this point, the question is how much. And what does the Fed say? Why are they cutting? Is it cutting out of strength or out of weakness? And it also depends on the job report. If the job report is very strong, or like strong, let's say 200,000 jobs versus expected like 100 something, then and they cut by 0.5%, 50 bips, it might be construed as cutting out of strength. Like, hey, economy is doing great, but we defeated inflation, let's cut. Okay, but if jobs go down and they cut 50%, 50 points, 50 bips, then it's going to be taken as weakness. They're like, okay, we failed. The jobs are getting out of, the job losses, unemployment is getting out of control. We need to cut to stop the train. And yeah, then I think the whole stock market, at least in the next couple of months, we're already in September, and that's like not a good time for stock market. So I think it might take a bigger dump, and again, then YieldMax funds will be just like bleeding red, and a lot of people will be selling, and you know, selling at a loss and ripping their hair out and swearing they will never touch it again. I'm not doing any of that. I will just keep sitting on it. You know, I bought for $42 over here, and I was sitting below $10 over here during FTX. So I've been through this. My investment strategy with this is long term, so I'm not worried about BITO. It's just like, you know, what do I do? And by the way, another strategy what you can do, I wouldn't recommend doing it right now because we still don't know what's happening, but let's say BITO gets like $14, right? And what I would then do is sell puts. Now, guys, again, don't follow me into this. This is all super risky. Not a financial advice, but basically, if we go down to like 15 bucks, so right now we're at 17, and you can sell right now January 25 put, where you agree to buy for $15 100 shares of this, and you collect upfront $2.42, and that is about 17%. you get right away, and your break even is like 12 bucks. But I would want to start selling puts if we get to down like $13, because that's when you can get the same amount, almost the same amount, or the same percentage. And implied volatility on the puts is much higher. Look at this bad boy. And if we're aggressively falling, that means that implied volatility is aggressively high. And let's say we're at like $13. We can sell like a $2.50 put, and that puts us like $10.50. So you collect a bunch of money up front, and then you know, in 4 months you get to buy the shares for like 12 bucks, $13. Even, yeah, so if we fall to 13, I would sell something like a $10 or $11 put, and at the time, with the implied volatility, I would say that it would be around $2. So, guys, that would be sweet. Even if I get assigned on a $10 put, like, we never went below $10 over here. Like, of course we can go below $10. We can go to like 7, 6. But, you know, break even on a $10 put sold at $2. That's $8. Not bad. And then you already have the shares. You can start selling calls on them, more aggressive calls, like, you know, $20 calls. Not, you don't have to go 35, 40. Basically, yeah, that's a lot of. It actually would be nice if it dropped to like $13, $12 range. I mean, at the same time, it would be nice if we went up to $35, $40. I actually wanted to go up, but it would give me an opportunity to buy some long dated calls, make some money on a lips, on a puts. Yeah, that would be a really nice buying opportunity. But even now, I will start reinvesting the dividends and increase my position. I like this price already. Again, like, I essentially bought shares of BITO for $17.75 over here in March or May of this year, whenever I exercise them. Anyway, guys, yeah, this was super long, but I like BITO. Clearly, you can see I'm not a big fan of YieldMax, and not that I'm not a fan of it. I just, the management just like, they're way too risky. They're way too risky for me. Because it's not their money they're risking, they're taking their 1% management fee, and they fly with it. And by the way, here's a very interesting thing, guys. So this is the daily trades. I'm not even gonna go into BITO. BITO is a joke. But basically, they have 4 million outstanding shares of BITO altogether. And so this is a YieldMax archive. So if you need some historic data on their trades and their holdings, here you can download their previous trades and holdings. So what I want to do is actually YieldMax, YMax, because YMax holds YBIT, and I want today, no, yeah, whatever, it doesn't actually matter. Let's see, YMax, how many, so again, we know that they have 4,050,000 outstanding shares. How many of those shares are owned by YMax? Check this out. Let's find YBIT right here. So YBIT owns about 20% of YMax owns about 20% of YBIT's outstanding shares. That's not bad. AIYY is probably a lot worse. So 1 million right here. 1,081,000 shares of AIYY, and let's see how many outstanding shares of AIYY there is. I think BITO holds a majority, or YMax holds the majority of AIYY shares, which is kind of bad for YMax holders. Yeah, their outstanding shares, I want 3,425,000. Okay, well, it's not as bad. They hold about a third of their outstanding shares. Whatever. Anyway, yeah, like, I'm just not a fan of how YieldMax managers run the synthetic and cover call strategies. Sure, they're doing all right for the most part, especially like if you look at the total returns of Coney, Nvidia, even Misty has amazing total returns, but then like most of their other funds are not doing so great. And whatever, I think it's mediocre, and I think just for me, BITO is a much better stock long term, and right now it's at a sweet price for me. I like the price. And again, guys, not financial advice, but thank you for watching. Smash that like button, subscribe to the channel. If you have questions, comments in the comment section below. Come back for more. Sorry it took so long, but I'll be making First of all, I'll be making a lot more videos. I've just been busy. School beginning, I have to figure things out, take my kids to a doctor and all that good jazz. Anyway, I'm almost done with that, except for I have to go to a wedding. So I'll try to make as many videos as possible. Thank you for watching. I'll see you in the next one. So next I'll be talking about Palantir. I'll be making a bunch of videos on Palantir, maybe a couple of videos on Nvidia.